Good morning, everybody. It's Monday, March 3rd, 5:23 a.m. Central Time. Grain markets are mixed this morning. May corn futures down 3 3/4 at 465 3/4. May soybeans down 1.5 at 1024 1/4. May Chicago wheat up 1 3/4 at 557.5. May Kansas City wheat up a half cent at 573.5. May spring wheat is up 2 at 599 3/4. We had some, we'll call it unfortunate news out of China overnight.
So, China may target U.S. agricultural imports as part of a possible tariff retaliation. Chinese state owned media, the Global Times, reported on Monday that China is studying both tariff and non tariff measures and that U.S. agricultural and food products will likely be targeted. The talk is in response to last week's threat from President Trump involving an additional 10% tariff on Chinese imports set to take place on Tuesday this week.
This is not the best way to start your Monday morning. I go to bed at 8 o'clock, so I didn't see this till this morning. And it's like not the best way to start your week necessarily. China is a huge buyer of U.S. soybeans. And if the Global Times, which is like they call it it's like a gossip rag almost, but it is backed by the Chinese government or the Communist Party, is what I'm told. So this is not the headline that says, hey, China's going to tariff U.S. soybeans for sure. It's just, hey, they're talking about it. But in any case, China is responsible for 47% of all U.S. soybean export commitments this year. USDA projects that exports in total will account for 42% of all demand for U.S. soybeans. So that means that China by itself is responsible for about 20% of all demand for soybeans grown in the United States. So this is a tremendously big deal. There are some stipulations here potentially. U.S. Commerce Secretary Howard Lutnick was being interviewed yesterday. He said that tariffs on Canada and Mexico will go into effect Tuesday, but that Trump has not yet determined whether or not he'll stick with that planned 25% number. So I guess maybe you could go back to China and say, well, maybe that 10% was just talk, and maybe he either doesn't do it at all, maybe they become more targeted. We don't really know. But it's not a great headline. I'm actually surprised the market isn't taking this worse. The markets are not off by much this morning. Soybean futures are down 2 cents. When it comes to what's at risk, out of these soybeans that China's bought, U.S. exporters have already shipped like 92% of them. So there's not a ton of old crop beans on the books that still have to be shipped. But you've still got that remaining, call it 6 or 7%. Maybe the little bit of old crop that they'd still buy. And then China would typically come in and start buying new crop U.S. soybeans, in the spring. It might be March, it might be April, it might be May. So that's the stuff that would be at risk if China proceeded with this. So this is perhaps a hint of what's to come, but it's not officially from the Chinese government. It's not the Chinese government saying, hey, we're going to tariff beans. We're not there yet, but we could be on our way, I guess.
The USDA will soon release the first portion of the $30 billion in federal farm assistance. While speaking at the Commodity Classic in Denver on Sunday, Ag Secretary Brooke Rollins stated that the first $10 billion in aid is expected in the coming weeks. The funds, which were approved by Congress in late December, are intended to support farmers by offsetting poor markets and providing disaster relief. Rollins said that the USDA is committed to creating a smooth and efficient application process. She stressed the urgency of the situation, stating that avoiding delays in delivering this critical aid remains a top priority.
The more farmers hear from Rollins, it appears to me, the more that they like her. And I'm told that she's one of Trump's favorite cabinet members. So I don't think she's going to go on record in public at the Commodity Classic in front of a bunch of farmers and promise that this money is going to be delivered and then backtrack on it. The cash is coming. The hard deadline is March 21st. These payments were written into law on December 21st of last year, and the law said that they had 90 days to disperse the funds. So the hard deadline is March 21st. The way that the payments look are like this. This is a graphic from Paul Niefern from AgWeb that was out a month or two ago. Corn growers are going to see $43.80 per acre, soybeans $30.61 per acre, wheat growers $31.80 per acre, cotton $84.70, rice $71.37, and there are some limitations per entity type stuff, but this stuff is going out to every grower in the country for the most part. I know that there are drastically differing and conflicting views on this. Some farmers say we don't want the money, it's going to mess things up. Some farmers say, hey, we absolutely need the money. There's a lot of different takes. Paul Neiffer is going to join me in today's premium video. We're going to talk about some of the impacts, some of the details, some of the stipulations, some of the tax implications that you guys need to be aware of. So make sure you tune in for that.
This season's crop insurance provides improved coverage for corn, while soybeans have a higher risk of losses. The spring projected price for corn is $4.70 per bushel, up 4 cents from last year. The projected price for soybeans declined by $1.01 to $10.54, and the projected price for spring wheat is $6.55 per bushel, 30 cents lower than last year. The limited profitability of soybeans reinforces projections that farmers could plant up to 94 million acres of corn. All three crops offer limited profitability. However, corn offers the greatest potential to break even.
Yeah, I think that these insurance guarantees just further emphasize the idea that corn's going to pick up a whole bunch of acres. However, if you're the average row crop farmer in the Corn Belt, you're in Illinois or Iowa, you buy 85% RP. Let's assume you're going to have APH yields. The safety net that this provides is really not that great. You got to remember at 85%, you got to take 15% off 470 for this thing to really kick in as like a price protection mechanism, and that's not until sub $4. So in any case, whether it's corn, soybeans, wheat, the guarantees aren't offering you a ton. I know there's a lot of add-on products that can help and make corn become a little bit more attractive, but you're still looking at a situation in corn where the insurance guarantee is like around break even for a lot of U.S. corn growers, maybe below break even. Soybeans are more than $1 below break even for most U.S. soybean growers, and wheat production costs are highly variable, but that number's not very good either. So corn is still the big winner, I think, as it relates to farm budgets, even though it's not really winning.
So, if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos from last week?
Ryan Moe was on with me on Friday. He's our newest contributor. He does commercial grain business for Stone. We talked about basis. We talked about calendar spreads. We talked about farmer movement. He had some really great advice, I think, as it relates to corn basis, soybean basis, some things that he's seeing among his customer base. A call Thursday last week, a report day, the Ag Outlook Forum. And any day there's a report, that's a good day to be a subscriber. We have a video snapshot, which covers the high level items, like a 3-minute video where I kind of tell you, hey, this is what you need to know about this. This was out within 10 minutes of the report. So if you're looking for up-to-date information on report day, it's a good deal to be a premium subscriber. Check out the subscription today, guys. $50 a month. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Paul Neiffer will be on today again to discuss direct payments. We're going to talk about ERP and the disaster relief stuff a little bit also. Give that deal a shot. I will forward you a copy of this morning's email.
The funds trimmed their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, February 25th, large money managers were net sellers of 26,000 corn contracts. The funds were also net sellers of 10,000 soybean contracts and 17,000 contracts of SRW wheat on the week.
This is quite literally last week's news, as it always is,
Mm-hmm.
but these numbers are very likely drastically different in real time. The private groups estimate that Thursday and Friday combined last week, the funds probably sold like 70 or 80,000 contracts of corn. And I don't know if that's right, but this number in corn probably isn't 334,000 net long in real time. It's probably closer to 250 or 260. In soybeans, funds are probably net short a small amount of beans in real time. So we've got a big liquidation event in the row crops, which is ongoing this morning with the markets just a little bit lower.
China will tighten regulations to prevent volatility in grain prices. Regulations on grain purchases and storage will be strengthened to ensure price stability. According to a Chinese official, the increased oversight will address grain industry challenges. Based on USDA estimates, Chinese stocks of both corn and wheat are very large. Still, the government says that it's set on building stocks further. This could be done through either imports or purchases of already existing domestic supplies.
This could also be just talk. I don't know if they're really going to do anything. They've got a lot of corn and a lot of wheat on hand. If you are to believe USDA's World Board estimates of China corn ending stocks, they're going to have 203 million metric tons of corn left over at the end of the marketing year, which would equal 70% of all global ending stocks. And China corn, to put this in a different perspective, maybe in a way you guys could view it, China corn ending stocks at the end of the year are projected to equal 67% of last year's U.S. corn crop. So you're talking what, like 10 billion bushels of corn left over. So I don't know that they need the grain, but I also don't know that these numbers are real. Wheat is similar. China is projected to be sitting on, or will sit on, 50% of all projected global wheat ending stocks. Chinese wheat ending stocks are projected to equal 93% of this year's Chinese wheat crop. So it's like they've got a whole nother wheat crop just kind of sitting around the country. So when you look at the statistics, if you take them at face value, it would not appear to me as if they need to buy a whole bunch of corn or a whole bunch of wheat. But I don't know how real these stats are, and maybe there's some other motive behind the talk.
A Russian missile struck the Black Sea port of Odessa on Saturday. The missile damaged a civilian vessel owned by a European company. Shipping infrastructure was also damaged, and 2 port employees were injured in the attack. The attack occurred one day after President Trump criticized Ukrainian President Volodymyr Zelensky for being disrespectful and ungrateful during a White House meeting. Although both leaders were expected to sign a minerals agreement, the deal was not finalized, and Trump eventually asked Zelensky to leave the White House.
So a couple of stories. The attack on the port has had no impact on prices. Wheat futures are 1 to 2 cents higher this morning. The debacle at the White House, while entertaining, had no impact on the market the way it seems. So as it's been for a long time, the market, just the wheat market in particular, just seems to be immune from any of these Black Sea headlines.
USDA reported a flash sale of soybean oil on Friday. U.S. exporters sold 20,000 metric tons of soybean oil to unknown destinations for delivery during the current marketing year. This is the first flash sale of soybean oil for 2025.
I can't help but wonder if we're going to start exporting more bean oil as enthusiasm regarding the biofuel situation kind of wanes. There's a lot of companies divesting because of lack of policy. What did cattle do on Friday?
Cattle futures were down hard on Friday. Live cattle were $167 to $355 lower. Feeders were $147 to $287 lower. Cash cattle trade was also lower last week. In the Southern Plains, cattle were $2 lower compared to the prior week at $197. Up here in Nebraska, cattle were $1 to $2 lower at $199 to $2. And then over in the Western Corn Belt, cattle sold at $198, which was $1 to $3 lower. Box beef was mixed on Friday. Choice was 65 cents higher at $311.83, and select was 8 cents lower at $302.05.
Outside markets, U.S. dollars off this morning. The S&P's up 20 points. The Dow's up 90. Bonds are off a little bit. Gold's up $35. Crude oil is about flat. Bitcoin's back to about 92,000. It was down to, I think, 80,000 or below that last week. Trump was talking strategic crypto reserve. Again, he's talking Bitcoin, but also some of the shit coins that probably shouldn't be included. I should really be on the advisory staff of the crypto reserve. Anyways, everybody have a great day today. We'll be back on Tuesday.